Yes, so the first financial statement that we're going to make is the trading account. The purpose of the trading account. Colleagues, what's the purpose of the trading account? Anybody? The purpose of the trading account is to find out their gross profit. All right, you want to find out the company's gross profit. Okay, and the way we get gross profit, it's sales, selling price. Remember the formula: profit, selling price minus cost price. That's the same concept we're using here. Okay. Now here, instead of selling price, we'll say sales revenue minus cost of goods sold. All right. That's how we get our gross profit. Okay. So what is do you remember the first item that goes onto the trading account? Let's see. Mr. Lyson, you were there that day. Okay. Thank you, madam. Okay. So revenue, let's see, 150,000. I don't think there was return inwards in this question. I do not think there was return inwards. Yeah, no return inwards. So we'll put it at the last column. Sales revenue 150,000. Okay. So since there's no return inwards, there's nothing we're deducting it by. Yes. What is the next item we need to tabulate? Madam Sylvia? Yes. Thank you. Opening, you have to tabulate um, the cost of goods sold. So the first part, remember, cost of goods sold breaks down into this equation here. Cost of goods sold, COGS, is total cost of goods available for sale minus closing inventory. Okay. This is how we get our cost of goods sold. Okay. So here we need to tabulate our total cost of goods sold. Okay. And to get your total cost of goods sold, TCGAS, okay, it's your opening inventory plus purchases. Okay, purchases is also going to have some adjustments. If there's any carriage inwards, you add it in. All right. And if there's any purchases returns, you deduct it from there to get your net purchases. Okay. So basically, purchases plus opening inventory will give you the total cost of goods available for sale. So yeah. So we start with opening inventory. Okay, here's our opening inventory 7,500. Ignore this date, colleagues. It's going to confuse you. Going to confuse you beyond the point of no return. So ignore this 1st October here. Opening inventory 7,500. Okay, what's the next item? Thank you, madam. Thank you. Purchases. Okay, let's see. Purchases. I don't think there was any adjustments for purchases. We've got purchases here 92,000. Okay. Then we've got some adjustments to purchases. I see purchases returns here, but let's see. Do we have courage inwards in this question here? No, there is no courage inwards. So, colleagues, what are purchases returns? No, 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 no. You're in the correct path. Yes, purchase returns. These are the goods we return back to our suppliers. Sometimes they may not be okay. Okay, they may be the wrong ones. It might be expired. So various reasons. Okay, so we deduct purchases minus purchase returns. 92,000 minus 1,500. Don't know why my Excel is freezing. Okay, 90,500. Okay, so at times you might forget to add this 75 to the 90,500. You might just go straight and deduct closing inventory. So always pay attention to this figure there above. Okay, at times you might miss it. Okay, so we find the total cost of goods available for sale. Okay, remember the total cost of goods available for sale, TCGAS, is opening inventory plus purchases. 7,500 plus 90,500, we get 98,000. What is the next item that comes after you've got your total cost of goods available for sale? What is the next item? Thank you. Less closing inventory. 8,000 closing inventory. So to get our total cost of goods sold, is the total cost of goods available for sale minus the closing inventory 90,000. Okay, this is of our cost of goods sold. Any questions? Are we okay with this? Any questions, queries, clarifications? Okay, so now we get our gross profit. Sales revenue minus cost of goods sold. Gross profit 60,000 kwacha. All right. Then after the gross profit, we're going to say add any form of income or gains. Okay. Add income or gains. All right. So if you remember our allowance for receivables, okay, remember the adjustment we made? Our allowance for receivables at the beginning was 250 kwacha. That's what we expected not to get from our receivables. Then at the end of the year, it went down to 150 kwacha. So that decrease in our allowance for receivables will be added to the gross profit. So you say here decrease in allowance for receivables 100 kwacha. Colleagues, what other form of income do we have in this question? Do we remember the other one? Yes, commission receivable. 800. So another important point, okay, whenever you hear the words received and receivable, just know these are forms of income, okay? When it's received, it means money exchanged hands. When it's receivable, you've done the work or whatever you needed to do, but money hasn't exchanged hands. So if you hear commission received, rent received, discount received, okay, those, or rent receivable, commission receivable, then those you just know you have to add them after the gross profit. Okay, colleagues, if it just ends with the word received or receivable, then you know you just need to add it up. So we add our total income here, 100 plus 800, we get 900. So we get our adjusted gross profit, 60,000 plus 900. 60,000, 900. Okay, questions, queries before we proceed? All right, so the next part is just to list out our expenses. Okay, we list out our expenses. So some of the expenses were adjusted for. Okay, wages 5,400. Rent and rates 14,500. Electricity and water 6,750. 6,750. Advertising 3,800. Insurance 4,100. General repairs, remember we did that adjustment, so we removed that 6,000. So general repairs was 2,900. Capital drawings, bank overdraft. Bank charges and loan interest 1,100. Sandra expenses 5,600. This 500 loss in revaluation of computer. We have depreciation for equipment 13,125. 13,125. Depreciation, fixtures and fittings, 450. If I'm not mistaken, I believe that's all the expenses. Okay, so we total up the expenses. 58,225. Those are our total expenses. So we now get our net profit. So our gross profit, 6,900 minus our total expenses, 2,675. That is our net profit.